Welcome back to the How to Trade Crypto series. In this episode, we're going to be using supply and demand and tying in candlesticks, trend lines, and chart patterns for those extra confluences. Let's jump straight into this one.
In this case, we're talking about Bitcoin. Is this Bitcoin run that we're seeing now?
Bitcoin and crypto bears are Bitcoin bulls. If you look here on the chart around, it's sort of just underneath 42. Here is why the cryptocurrency.
This is big. This is significant.
So let's firstly take a look at tying in candlesticks with our supply and demand zone. Remember in our previous episode, we've already learned how to draw up those zones, checking out the validity of those by looking left, seeing that it's acted as both supply and demand to confirm just how strong those zones are. Now here, just take a look with me. We're looking at BTC as an example. I've just got this marked up on the daily chart. Now, firstly, look, you can see the price has entered into our supply zone. And look what we've formed. We've formed a nice evening start at the top of the trend. So that's our confluence for shorts in towards our next zone. So obviously, tying in other confluences as well, you'd be looking to go short there. You've seen a bearish closure with this following candlestick. You'd place stops just above that supply zone, and you'd be working your way into your next zone, zone to zones. And obviously how deep you run these shorts depends on how many other confluences you've got. Looking left, how strong are these zones? Are we likely to break that down to the downside and move to our next zone? So on and so forth. So that's to give you an example there with a nice evening start at the top of the trend. Again, another one here. Evening star, price pulled, it's already selling off, breakout, retesting our zone, got a retest, a confluence here, and then we formed a nice evening start at the top of the trend. Again, similar sort of thing, you'd be placing shorts, working in towards your next zones. Just want to look again, find another example. Okay, this one more so, price entered the demand zone, okay? The price has been falling and now we're looking to bottom out. And look what we formed, candlestick. Big bullish engulfing. Okay, remember we've gone over these candlestick patterns. You can refer to our previous videos, or you could just do a simple search candlestick patterns and tie them in with these zones. And so as you can see here, bullish engulfing. So what you would have been doing is taking some longs here, placing stop just below that zone, leaving a bit of breathing room where we previously the low was, and then working your way into your next sort of zone to zone. Again, you're going to run those longs depending on other confluences. Looking left, how likely are we to continue to the upside and break down these other zones? Okay, so that's candlesticks as well. Let's just get another example. Again, look. Nice little evening star coming into our supply area. We know this is supply. Looking left here, rejections. We've seen it rejecting here. And look, a perfect evening star, short in towards your next zones. Okay, let's just try and find one more example. Okay, here's another two. Look, again, sort of shooting star, evening star there in towards our next zone. Remember, when we're taking these shorts, we're leaving a bit of breathing room above the supply area. Okay, and working our way in towards sort of the next zones. Okay, you've seen previously to the left, we're likely to break this one down. Yep, so we'll target this zone here below in towards sort of 36K in this example. Okay, again, same again here. You're leaving a breathing room just above that supply region and working your way in towards the zones below. So that's just sort of the use of candlesticks. As I say, you can use many others. It's just additional confluences. Let's now look at tying in trend lines with our zones. So here again, BTC USD as an example. What I've done, I've marked up like a descending trend line here. You can see, look, rejection. We're always looking for at least sort of 3 taps there or thereabouts to confirm that this is an active trend line. So we would have started marking this up because we can see the price is falling to the downside and is more or less respecting this trend line. So look now, we're going to be looking for to try and trade this trend line, but tying in as another confluence our supply and demand zones. So you can see again, we've already got our zones marked up, and look what we've done. Tap at a trend line, but we've also entered a known supply area. Look, rejection, sell, rejection, sell. So what we'll be doing, we're placing shorts just above, okay, leaving some breathing room, above the trend line, above the zone. We've got a couple of confluences there, and then working our way to the next zone. Same again, look down here, respecting this trend line, respecting this zone, stops leaving a bit of breathing room above the trend line, above the zone, and targets to the downside in towards the next zone, okay? You see that, how we're respecting that until we obviously eventually broke out of that. But that's just a simple example of tying in trend lines. Let's just see if we can mark up an ascending trend line, because that's a descending one. Okay, look here. Okay, all right, again, look. So we've got our taps, 1, 2, 3. Okay, look, we know this is a valid trend line. So again, look, the price has fallen into our zone. Okay, so we know what's going to happen here. We've got support from the zone, but we've also got support from the trend line. Okay, so look, we'll be taking longs. We'll be leaving room, just a bit of breathing room, leaving a bit of breathing room below the trend line and the zone, and then run into the upside in towards our next zones. Again, how high we go depends on your own confluences. Looking left, how far do you believe this can go? All right, so that's an example of an ascending trend line and descending trend lines, but tying in with the zones. Let's now take a look at some chart patterns and how they tie in with the supply and demand zones as well. So here, you know I love my flags. Look, I've marked up a bull flag here. We're trending to the upside. Okay, we initially respect this zone and then pull back into this zone. And look what we're doing while we're consolidating, working zone to zone. What we're forming, a flag, a bullish flag. We expect the trend to continue to the upside and break out to the north. And so did we see that. Again here, okay, finding demand, consolidating, forming a flag structure. Price enters our zone. We know that's going to be supported and again needing to push to the upside. And so did we see that, breaking out and resuming to the north. Okay, so let's just take a look at some other examples. In a bear market, look, price is breaking down this support zone here. Look, breakout, retest. We know that it's going to be supply, forming a pennant structure, okay, around that zone, consolidating, then we break out, resume to the south. Again, flag. Now we're working between zone to zone. We're consolidating, forming a flag structure, flag pattern, again, or a wedge breaking out south. And you can see the same again there. I want to show you another recent example, actually, on a lower time frame. Okay, here, look what we've got. What we had here actually was a big, look at this big supply region. So breakout, retest, look on a daily. You can see it's massive supply now. We've seen in the past, this has acted as demand. Look, demand. Okay, then we broke through, retested supply. And look, big rejection there. What you would have done if you're looking on the lower time frame for entries, drop down to the hourly. You see that we faced rejections here in the past. And look what we formed. Okay, let me just mark this up properly. Okay, look, left shoulder, head, right shoulder pattern. And if you drop this down to the 30-minute, you'd even see a flag structure forming at that neckline of that pattern. Okay, and we know this is a big supply zone. We're going to catch some rejections here. We're spotting it now on the lower time frame for entries. Spotted a pattern, chart pattern, head and shoulders, and a flag, and big breakout. So you can just see how effective those patterns can be, tying that in with the supply and demand zone. Guys, as a reminder, it's a massive opportunity. Jump in with CoinCasso, become an investor into the exchange. Cryptocurrency exchanges are so profitable. They are 365 days a year, whether you're in a bull trend or a bear trend. So do check that out. If you did enjoy this EP, as I say, showing you the effectiveness of tying in trend lines, chart patterns, and candlesticks into supply and demand. If you want more, smash up the subscribe button, smash up the like button, and I'll bring you some more content. Stay lit. Let's get it.